welcome to our look at the upcoming Wednesday, 28th of January trading session. You can see that I have the economic calendar in front of you as per usual. And there are several high-level statements in the marketplace, but really there's only one worth paying attention to on the whole, and that is going to be the Federal Reserve's monetary policy statement and interest rate decision. The interest rate decision really isn't anticipated to change, but the policy statement will be parsed and looked at over and over again by traders to see how close the Fed is to raising rates or what they see the outlook of the economy being, and that will have a massive effect on markets around the world, but more specifically the U.S. stock markets and the U.S. dollar, of course, will certainly be felt in the currency markets also. You can see that the S&P 500 has fallen a bit during the session here on Tuesday, and that has a lot to do with core durable goods orders coming out weaker than expected. So now we need to see what the Fed's going to do. Signs of weakness will probably be positive for the stock market. They normally are, because it will show that the Fed isn't going to tighten any more than it already has by leaving QE. Really, at this point in time, there seems to be quite a bit of support below anyway, so we're looking for call buying opportunities on supportive candles closer to the 2000 level. The euro has gotten a little bit of a reprieve for the session. The real question is now, can we get above the 115 level? That's probably asking quite a bit. But if we do, that would in fact mean something. There's still a lot of noise above, and truthfully, the euro really isn't out of the woods until we get above 120. So really at this point in time, we're actually waiting for a resistance candle in order to buy puts. We don't have it right now. That's okay. This represents value in the US dollar, and we do think that the trend's down for a reason. And unless the Federal Reserve comes out with a statement that is completely shocking to the market, more than likely this is going to end up being a put buying opportunity before it's all said and done. And finally, looking at gold, you can see we have bounced a bit, and it looks like we're probably going to consolidate here between 1280 and 1300, at least between now and the Federal Reserve, the monetary policy meeting minutes are released in the statement, I should say. So with that, we need to see a break above $1,300 to get bullish. We still look at pullbacks as potential buying opportunities, as the 1250 level below should be supportive. With that, we've taken a look at what could be a very interesting Wednesday, January 28th trading session.